Welcome back to the portfolio, everyone. Jim Cramer, the CNBC analyst, believes there are some stay-at-home stocks that are going to continue to surge even higher. Some of these companies are already up over 100, 200% in the past year, but Jim Cramer believes there are a handful of companies that until we get the pandemic under control are going to see more rapid growth. So in this video today, we're going to go over some of Cramer's recommendations on the best stocks that he sees continuing to grow over the next few months. As we know, entire society has been shifting towards more stay-at-home technology, and all these stocks related to stay-at-home ordering through e-commerce or remote work have been on fire. There's also some more household and restaurant brands that Cramer believes will continue to weather this storm very nicely and once again have the fundamentals and the balance sheet to grow the business through this time of hardship. So we're going to go over all of these picks that Cramer's kind of gone over in his latest Mad Money episode. And we're going to go over these companies to show you some different ideas on stocks that a top analyst that people love and respect believes will continue to soar to close out 2020. So before we jump into the stocks, as you know everyone, I am the Gen Z investor, and every single day we talk about the stock market, we go over different stocks you can buy and sell within your portfolio, and in this video, we're going over a couple different picks that Jim Cramer believes will continue to rise until we can get the pandemic under control, and he sees a lot of upside potential, although some of these stocks have already seen a massive run-up. So in no way are these stocks undervalued at their current price point. A couple of these companies have some huge gains over the past year, but Cramer still believes that they can go even higher. The first stock is Zoom, ticker symbol ZM, currently at over $536 a share. They are up a massive 620% over the past year, with a market cap of $144 billion, trading very close to their all-time high. So of course this company is being traded at a crazy multiple right now, but Cramer believes that this stock can still go even higher. They're diversifying their income, and they're actually creating a platform where you can actually host and organizations can host paid events through Zoom. So the live speaking world of gathering in large crowds to watch a speaker or a play or a show kind of isn't coming back anytime soon, and Zoom's innovating to create a platform where organizations can actually host paid events through Zoom. And this company believes the growth will continue to flourish because if we get another wave of the pandemic, if we get another shutdown, and more large-based tech firms are transitioning to stay-at-home work, that this company, although they're being traded at a massive multiple right now, can have more potential to go even higher. They've seen insane revenue growth over the past few years. Each and every year, total revenue has been doubling. 2018, $150 million, up to over $330 million. In 2020, they've seen over $600 million, and in the past 12 months, over $1.3 billion in total revenue. So their revenue numbers have been growing at an insane rate each and every year, and this is one of the tech stocks that Cramer believes can go even higher. The second one is Peloton, ticker symbol PTON, at $136 a share. They're up around 500% over the past year. Another stay-at-home based exercise company that he expects will go even higher. These companies are on massive run-ups, and of course we have to talk about they are crazy evaluations right now, being traded at 439 forward PE. So some very, very high multiples on these companies, but he believes as gyms continue to stay closed, as cases continue to rise, that he believes the pandemic is not under control just yet, and until that actually happens, people are going to long and actually search for exercise equipment for their homes, and Peloton is a leader in that market. This is another company with insane revenue growth rate. 2018, $400 million, more than doubled into 2019, more than doubled once again into the past 12 months of over $1.8 billion of total revenue. The third stock is a packing company. As e-commerce continues to grow, and the demand for shipping goods and packing supplies has only continued to flourish once again. International Paper Company, currently at around $45 a share, they are only up 9% over the past year. They got hit in the month of March very hard and have slowly been recovering over the past 6 months. Currently at a market cap around $17 billion. This is a dividend-paying company, currently yielding 4.6%. So a nice high dividend yield on this stock. They have a high payout ratio of around 81% of their earnings, but hopefully over 2020 and into 2021, they can do a nicer job of improving revenue and net income to get this payout ratio down. And you're locking in a nice high dividend yield at purchase, but that dividend is still continuing to grow at a rate of around 6.9% averaged over the past 5 years, which is a nice solid dividend growth rate. And they've done the dividend growth for 11 consecutive years. Another packing company is WestRock, currently around $39 a share, up or over 5% in the past 12 months, around a $9.89 billion market cap, so a smaller cap company on this list, but it does pay out a nice dividend as well, yielding 3.49%. And they're only paying out around 51% of their earnings, and this is another company Cramer believes can continue to go up even higher. Next, we have some restaurant stocks. So Darden Restaurants, the parent company of Olive Garden, ticker symbol DRI, currently sits at around $100 a share. They are down 10% this year and have slowly been recovering from the March lows. They have a $12.9 billion market cap and a very low dividend yield at around 1.19%. So Cramer believes this company can continue to go even higher and recover fully past pre-pandemic highs. Because of the balance sheet, they believe they can expand, and as smaller restaurant chains that aren't as large and don't have the balance sheet fundamentals to withstand this pandemic any longer will be shutting their doors forever. He believes Darden Restaurants have the fundamentals and the money to, of course, weather this storm, weather the low profits, the losses over the next year, and continue to grow and expand their business as we see a recovery in the market, and he believes shares can go even higher. So with that dividend, currently only 28% of their earnings are being paid out as a dividend, and a 5-year dividend growth rate of over 10%. The second restaurant stock he believes can go even higher is Chipotle Mexican Grill. Ticker symbol CMG, currently being traded at over $1,300 a share, is up over 60% this year. They have market cap at around $37 billion and being traded at a forward PE of 121. This is another company he believes can go even higher. They have some great online order service. They've seen a rapid growth in the mobile pickup and order platform, and their actual same stores didn't see much of a decline because of the pandemic. And of course, similar to Darden Restaurants, this company is a large chain. They have billions on their balance sheet, and he believes can withstand the storm of this pandemic and continue to grow. And he likes because their kind of platform and their restaurants aren't required to have sit-ins. You can order their food and it's nice, easy pickup. Their restaurants don't need a lot of in-person seating, which of course during this pandemic is limited as well. The final stock Cramer recommends is TakeTwo Interactive Software, ticker symbol TTWO, at $168 a share, up over 39% in the past 12 months. They have market cap of over $18 billion and a forward PE of over 34. They've seen a slight pullback away from their 52-week high, which sits at $180. So this company has a forward PE right now of 34.73, and overall, this operates in the video game sector. And this sector of the market will continue to grow, especially over the next few months, because of the release of the new consoles and new annual video games come out in the months of October and November. And right because of the holiday season in December, this overall sector is going to expect to see some massive growth. So although they are up 39% this year, Cramer holds this company in his charitable trust, and he believes he will see some nice future gains to end out 2020. As people are staying more at home, video games have been a new form of entertainment that are taking people of all ages. There's young people and older adults getting into the video game sector right now. And overall, with the release of new consoles from Sony and Microsoft, he also does a quick mention that those are some brands that may see some future growth to end out 2020 when the new consoles come out. New video game consoles such as the Xbox and the PlayStation come out every about 3 to 4 years. So this is a new event that hasn't happened for a while for both of these brands that is hopefully going to boost the top and bottom lines. With TakeTwo, ticker symbol TTO, they've seen some nice total revenue growth, a consistent upward trend in revenue each and every year beating the previous year's numbers. And I believe these trailing 12-month revenue will be beat over the next year as well. So those were 7 different stocks that Jim Cramer believes can soar even higher. Although a couple of these companies have been on some massive run-ups, he believes that these stocks will continue to rise until we get a vaccine solved. He goes over the companies like Zoom and Peloton, these stay-at-home based brands that until we can get the pandemic under control and life can go back to pre-pandemic ways, these are companies that will continue to grow, continue to see increase in revenue, and will actually grow their market cap and their market share in their respective industries. So thank you for tuning in. I am the Gen Z Investor, and we'll see you in tomorrow's video.